Right. So our guest says Barrick is considering spinning off a minority stake in its North American assets, just a minority stake, because it doesn't want to give away the crown jewels. We're joined by John Ing, CEO of Maison Placements Canada. John, thanks very much for joining us. Kind of interesting, isn't it? Yeah, they're not talking about a breakup of the company, as Lindsay just pointed out. So it's kind of putting a toe in the water, it sounds like, this IPO.
Well, Andy, I think it's the parts are worth more than the whole. When you look at the Nevada joint venture, that's probably one of the world's richest mining complexes in the gold mining business. An interesting piece of Barrick is the 4 Mile, which is a potential huge tier 1 asset. You're looking potentially at 25 million ounces in the ground. Very rich at 15 grams per ton, a potential producer, maybe 750,000 ounces every year for the next 9-10 years. So it's a big potential mine. And I think that in the key part of it is outside the Nevada joint venture right now. There's a feasibility study expected sometime in the early part of 2026. That will bring a valuation, and I think that right now it's part of the plan of being in this new IPO. So there's a lot of value in addition to the mines that are in Nevada. There is this 4 Mile potential pickup. So the parts are worth more than a whole in this state.
And it's interesting. I mean, this would reverse, or it looks like they could end up if there is a breakup, it would end up reversing that merger between Barrick and Randgold, in which Mark Bristow took over as CEO.
Well, I don't know whether it's reversing that. The Randgold brought a lot of cash flow, which when Barrick, if you recall, had a stretched balance sheet. Now with the gold prices, with the moves by Bristow and Fuller, there's no question that the balance sheet is super strong now, and it's a good time to be in the mining business. Barrick has the largest array of tier 1 assets, and dividing into, to me, didn't make sense. This makes a lot of sense. It surfaces value in Nevada joint venture. I should mention that for a long time, Barrick has traded at a discount to its peers. It's traded at 0.85 times. When you look at some of the North American, Eagle, 1.1 times. So there was a discount. And so spinning this off may be a way to close that discount.
Right. Yeah, it was 2019 they actually did that merger. So it would be a kind of odd situation, wouldn't it be, though? Barrick would presumably at this stage stay a listed company, and then they'd have this new co trading separately, owning some of the North American assets.
Well, that's right. I mean, it's often in a lot of businesses, they own subsidiaries. Cash flow is going to be very important. So they're not going to spin up. They're very profitable mines. I mean, in the 9 months of the free cash flow was something at $2.5 billion. And the Nevada joint venture is about half of Barrick's assets. So it's a surfacing of value. They want to keep the cash flow too, but they're going to share with the public, and the public will, interesting enough, will give it a valuation and likely close that valuation gap.
Is this putting a for sale sign on these North American assets, in that analysts are saying, well, Newmont is going to be very interested, come sniffing around, try to acquire the stuff. Some of that, the Nevada stuff, a lot of it's held in a joint venture with Newmont.
Well, the Nevada joint venture, Barrick owns 68.5% of that. Newmont owns 38.5%. Newmont's dilemma, if they want more of the Nevada joint venture, then they are going to have to go after Barrick. And while that's a possibility, I think Newmont has learned that just acquiring assets is not exactly the way to go. They've done 2 very big assets and have taken 2 very big write-downs over the pieces. So When I look at the assets of Barrick, and I've been saying for some time that it is undervalued because those tier one assets are long life cash cows, and that's what you want in the gold mining business.
Yeah, it would be interesting. I mean, Barrick are they're officially the head office is in Toronto, but it's been cut back radically, hasn't it, John, over the years? The actual presence in this city.
Well, it's interesting. Well, Barrick's a Canadian mine, and their head office is in Toronto. They no longer have a Canadian mine. They just sold Hemlo, for example. I think that was wrong. That was a mistake. I think that, but I think management, Bristow, they have a lot of mines. It's hard to manage. Different parts of the world. You mentioned Pakistan. Mm-hmm. They're bringing in foreign strategic sovereign partners to defray the risk. Because there's no question that today jurisdictional risk is a big factor. So this is a way for Barrick to surface the value of North America.
Yeah, and that Pakistan mine, it's right on the border there with Afghanistan. It can be a troubled part of the world.
But the great thing about mining, and particularly gold, there's a lot of gold there. So we have found, and I note that Barrick resolved its problems in Mali, just as they did in Tanzania. Mm-hmm. Gold mining is a tough business, but it presents a lot of cash. And given today's gold price and my expectation that the gold price is going to go higher, Andy, this could be very profitable.
Yeah, the industry is just minting money right now, isn't it, John, with this gold price?
Well, particularly the Canadian producers, when you look at somebody like a Eagle, when the gold price is at $4,200, so $6,000 Canadian, your all-in costs are $1,500, $1,600. So that's the profit margins are huge. The only problem, Andy, as we know, is that we're not finding enough gold mines. And gold has become a critical metal strategically from sovereign nations. And so reserves are declining for a lot of these producers. That's why when you look at Barrick, when you bring on something like 4 Mile, which is, as I mentioned, the feasibility study will next year, it might cost $1.8 billion to put into production. That's going to be a very profitable mine.
John, thank you very much indeed.
Good to be here.
John Ing, CEO of Maison Placements Canada.